The thing I am struggling with, or at least grappling with lately, and over the last many months actually, is the number of indicators that have just flipped their lids and done things they haven't done historically in all my market years, which is pretty much the history of this chart going back to 1998. The green moving averages you see on this chart had been what I called the limiters, and they were red because they were resistance. And reliably, every time this yield pinged the limiters to the upside, it was repelled. And in my opinion, it was deflationary or disinflationary signaling over the decades. And in my tinfoil hat wearing opinion, that was the license that the Federal Reserve needed to inflate the system, to bail out the bulls, bail out Wall Street, bail out everything. Why do we have inflation? Because this backbone allowed them to inflate, to save the day. Our heroes, our friendly inflating heroes, the vampire as I call them, you invite the vampire. Every time there was a crash in the yield, that was a deflation scare. 2008, Q4, 2020, Q1, we begged the Fed to inflate, and they obliged, right? And now something broke. The game is up, at least the game as it always had been, reliably pinging up to the limiters, which are now support. They're green, and something was broken, and that is support to this macro break. So I'm allowing for deflationary spirits to get into the market, maybe even all the way down to 2.6, 2.8% on this yield, and that still will not break the macro change that has come about. And there are several other indicators that have flipped their wig as well. One in particular is the yield curve, the 10-year, 2-year yield curve that has burrowed into inversion to a degree not seen since, I believe it was the 1980s, 1980, somewhere around there. Whatever it is, it's decades. Something has changed, something broke, and our job is to figure out the implications. It's exciting, actually, because boy, that was boring, especially if you were a bear or perma bear. Even, I'd say, a gold bug, gold above all, you know? It was, to me, it was Big Brother, Fed, in charge, completely in control. Well, this thing here, this spike up through the limiters, it just indicates that there is no surprise whatsoever that the Fed has gone so steroidal in its hawkish attitude. The Fed doesn't want this, in my opinion. Again, tinfoil hats on, whatever, I believe it, that this has the potential to wreck the game, end the gambit. I don't like what it means for Wall Street. I don't like what it means for conventional thinkers, conventional financial planners, advisors, ma and pa. I don't like any of it if I am them. I do like it if I'm me, assuming I can figure this thing out. If we get this right and we start to actually look into the future and are able to build forecasts or probabilities based on something that is now different than it was for decades previous, then I think we separate ourselves in a good way. I try to keep the noise about the war, Russia, Ukraine, the crappy politics in the United States, this nutty back and forth between these two cartoon parties. I keep that all out of it. I'm looking at charts, I'm looking at financial history. It's all I care about. That's my job. Even in real life, I'm not very political. I think it's all a joke anyway, so I guess I'm cynical. Back to the chart though, what is that thing? Is that a flag preparing for higher levels? That's what we're led to believe right now. We're led to believe that the Fed is going to raise rates, maybe Volcker style. Um, and that may well be. But the view that we've been putting forward has been a transition toward deflation or a deflation scare. And within that transition is Goldilocks. Very pleasant. Happy days are here again. Tech stocks, some of the sexiest stuff out there from 2020 and before, has been hammered in 21 and 22. And it's due for some relief. Happy days are here again. Goldilocks, baby. But that's a transitional thing, in my opinion. And I'm leaning toward a deflation scare after Goldilocks. And beyond that, it could be a new inflationary regime. The other way to look at this is that large spike, this bent out of shape inflation hysteria, could give it a long way to fall. So I am not at all ruling out that this thing doesn't end in a deflationary liquidation that they can't do anything about, or at least not initially. The Fed has no bullets. The Fed had bullets where I wrote in the chart, where's that panic button at the head of the inverted head and shoulders? They had bullets. They had the public demanding action, praying for action. They had zero interest rate percentage, ZIRP, and they don't have that now. So that's all done, and I don't know how the Fed is going to meet the next liquidation. So I don't think it's going to be easy to inflate, or there's a long way down before they'll have that imperative built back in to inflate the markets. The whole gig, the whole secular way of doing things over the last several decades may be up. Okay, I'm going to wrap it up now. I'm still really just getting used to this thing. I hope that the chart actually comes out readable this time. We shall see. Thanks for listening.